Welcome to today's market report. European stock markets are seen openly cautiously higher on Monday, helped by signs of economic growth in China, but with rising COVID cases continuing to create doubts about the global recovery. DAX this morning traded 0.4% higher. FTSE 100 in the UK rose 0.1%, CAC 40 in France climbed 0.4%. China reported a strong Caixin Manufacturing Purchasing Managers Index reading of 52.8 earlier in the day, indicating that the Chinese manufacturing sector continued to expand in July. The reading also corroborated the official manufacturing PMI of 51.1 released on Friday. The focus will now turn to manufacturing PMI data for the European region later on Monday to see whether this also points to a recovery for the sector during July. This comes after Eurozone GDP data released last week showed a decline of 12.1% in the second quarter of 2020, the largest quarterly decline on record. Meanwhile, the number of COVID-19 cases continues to rise. The total number of cases globally topped 18 million as of 3rd of August, according to Johns Hopkins University data, with deaths rapidly approaching 700,000. The United States is in a new phase of the novel coronavirus outbreak, with infections extraordinarily widespread in rural areas as well as cities, White House coronavirus experts said on Sunday. Worries are high that continuing waves of coronavirus infections may halt what had been a budding recovery in the world's biggest economy, particularly as Congress failed to reach an agreement over the latest stimulus measures before some earlier measures expired on Friday. Earnings season continues this week, with HSBC, the UK's biggest bank, in the spotlight after posting pretax profits of $4.3 billion, down 65% from the same period last year, adding that it has set aside between $8 billion to $13 billion this year for bad loans. Oil prices headed lower on Monday, with traders fretting about the recovery in demand, just as the major crude producers moved to increase supply into the markets. U.S. crude futures traded 0.7% lower at $39.97 a barrel. Brent contract fell 0.5% to $43.40 per barrel. Gold futures rose 0.4% to $1,982.60 per ounce, reaching a record high and continuing its march towards the $2,000 mark. On the FX front, GBP USD has hit the highest since March amid a massive dollar sell-off, and the cable has stabilized under 131 after experiencing high volatility. An update view on the US labor market by the all-important non-farm payrolls, the Bank of England's rate decision, and coronavirus-related news stand out in the upcoming week. The pair recently took clues from the Sunday Times news, suggesting that the UK reviewing COVID-19 fighting options, including London lockdown. Also weighing on the quote could be the comments from Britain's top scientists, as per The Guardian, while saying that secrecy has harmed the UK government's response to COVID-19 crisis. Further, Brexit talks have already dwindled and are scheduled for the restart on 17th of August for the 17th round, even if the latest chatter suggests receding odds of a no-deal Brexit. Neither Brussels nor the UK shows readiness to ease on their demands for the key stumbling blocks, including fisheries, level playing field, etc. On the positive side, the Telegraph came out with news suggesting that the businesses are on the recovery mode in the UK. Eurodollar is trading at 117.68, coming off a low of 117.41 touched earlier in the session, though it is still more than a cent below Friday's two-year high of 119.08. The dollar index gained 0.11% to 93.535. This is today's market news. Thanks for listening. We'll see you next time.